What we can expect this afternoon, we cross to our anchor, Nompumelelo Siziba, who is in Parliament. Very good afternoon to Nompumelelo. We saw earlier on in the bulletin our economics editor doorstopping the finance minister and hearing that there will be no austerity. Do we know what else we can expect in this budget?
Thanks very much, Nzinga. Well, it's interesting that he should say that there'll be no austerity when in the midterm budget he indicated that government would need to cut about 150 billion rand worth of spending over the next 3 fiscal years. So if that's not austere, I don't know what it is. And of course, this year, it's unlikely that they're going to be able to touch on the public sector wage bill, which many suggest is a big factor that weighs down on government expenditure or government costs. Because, of course, the public sector is in the last year of that 3-year wage agreement that was agreed a few years ago. And so, of course, apparently government has approached them to say, look, guys, can we renegotiate? And they've turned around and said, no way. And of course, you mentioned in the headline Nahau coming out to say, you know, if they do any fiddling with their wages for the 2020 fiscal year, there's going to be havoc to pay. So on that note, I really don't think that they're going to be able to move that much. In terms of what else we can expect for the day, I think you ran through a whole gambit of things. Of course, the finance minister has to cater to all of us, you know, taxpayers, labor, to business. I spoke earlier to a small business body that basically looks to nurture small businesses, and they were saying that perhaps the small medium enterprise sector needs some incentives, especially in this environment where we have a lot of load shedding. So if a small business goes out and buys a generator, perhaps they can get some tax relief off that and other types of incentives just to get things going. We know that sector is very important in terms of job creation. So whatever can be done to actually create an conducive environment for them. Of course, the minister is in between a rock and a hard place, as you mentioned, because about 34% of government expenditure is on the public sector wage bill. We are moving towards a situation where 18% of government expenditure, 18, is spent on just servicing our national debt, which is just going up exponentially. So then the other 50% or so is on the basic priorities, education, health, social security, police and security, and all those other things, and infrastructure. So we're going to be expecting him to speak to all of those issues. We need good policing. We've been promised more police on the ground, and that costs money, and so on and so forth. So it's going to be very interesting to see about the level of expenditure, or at least the rate of increase of expenditure on those particular priorities. Social security, in terms of the social grant system, we have about 17 million beneficiaries. Many people say this is not sustainable, but then of course we have a high unemployment rate. We have social issues where children are raising other children because they no longer have parents, and so on and so forth. We have the old age pension grant and all of that, and those people, they need to be catered for. But of course, I think the key thing is the economic growth situation. It's lackluster. We've been growing at sub 1% for a number of years, and there just doesn't seem to be that oomph to get the economy going. So we need to see if he's going to bring elements that can bring the oomph that we need for economic growth. Many international organizations, local organizations, the Reserve Bank don't see us growing that much this year and even beyond. So we're going to have to see what he has to say in terms of stimulus. We've been waiting to hear details on this infrastructure fund that they've been talking about since the midterm. We haven't really heard anything about deals and actual infrastructure that's taking place, because in order for a country to see growth, it needs to invest in itself now so that you can reap the benefits in the future. And when you invest in infrastructure, obviously in Nzinga, it does have a benefit for those who use it, your roads, your transport, you know, anything that's built. And of course, the big bugbear for us in South Africa right now is our energy situation. We keep on getting load shedding. We have been promised that we'll have load shedding for the next 18 months. And of course, if we don't have electricity, it can't power the economy, and we are going to continue to suffer in terms of being able to realize that economic growth that we so desperately need. Economic growth technically should equate to more jobs. We've heard so many jobs being lost already in established companies earlier earlier this year. The picture is grim, Nzinga. I don't know what he's going to be able to bring out of his toolbox, but of course we wish him all the very luck. And of course, as you continue to broadcast in the next couple of hours, Nzinga, I will have guests who will be giving their view, their predictions of what the finance minister will have to say. And of course, come 2 o'clock, we will cross over to the finance minister, Mboweni, who will be telling us what his ideas are. And then critically, no doubt you'll be there in studio, Nzinga, monitoring what's happening with the rand, because Moody's and investors are watching us. And if the budget doesn't look favorable, we run the risk, of course, that Moody's will downgrade us to junk status. It's the only ratings agency which has us at investment grade, and we are told that if they should downgrade us to junk, it means a number of investors who are mandated to only invest in investment bonds will decide to sell out of financial assets in the South African market. When they sell out and go into their pounds and their dollars and so on and so forth, they'll depreciate the rand because they're selling off the rand. And of course, once you get a depreciation in the currency, it means that we're going to likely get higher interest rates. And that's why our Reserve Bank has been reluctant to really push the pedal in terms of giving us interest rate cuts, because they're just not sure what's going to happen once Moody's kicks in. Hopefully it won't come to that, but of course we're just watching what happens. Nzinga, back to you.
Nompumelelo Siziba giving us an update there from the parliamentary precinct. She'll be there alongside our SABC economics and other teams to give you the most information about budget in the run-up and afterwards, with analysis from a broad sector of society. So let's